Good morning. It's Monday, November 18th, about 6 a.m. Central Time. Overnight, the precious metals are surging after Friday's productive but flat trading session. It's productive in a sense that consolidation is beginning to take shape and also form around key levels. I anticipate a lot of dip buyers will start to come into the market as they can find themselves with key support levels to put their stops below. Also, as the market gains momentum to the upside on different time frames, you'll see different types of traders take place. Like for instance, on the gold market, you look at the daily chart here, you can see that key support, that rounding bottom at 25.50. If you look at the silver market, put up a 240-minute chart, you can see this downward trend since the start of November, and the market is starting to break out above that. Also, you've got that key level support below the $30 region. So looking at December gold, we did see a shoot up once the overnight session opened. We did breach back above 2,600 for a split second here before selling back off, and then also now we're hovering around those highs. So 25.97 on the December gold. If you're going to position into the market here for the long run, though, I suggest looking at something like the February contract. And remember, they do have a 10-ounce contract, so it's easy to start to scale into that particular contract going out. Same thing with the silver market. December silver, 30.81 last high, 30.89 last, or I'm sorry, was the high in the overnight session. That's a big surge off that 30.35 that we saw on Friday. I anticipate that on Friday, or I speculate that Friday's price action, remember we saw that green shoot on aluminum and then also the copper market. Copper gave up much of its gains throughout the trading session. Aluminum gave up some of its gains, and I think that people were holding on for a bigger move in the silver market. I spoke to a couple clients and said that given the indication we saw in aluminum and the type of action that China took, we should see something like 50, 80, or closing up $1. However, I didn't believe it was going to happen because we started to see strength in other of the outside markets that were act as headwinds, like the dollar index, like 2-year treasury yields, and then the broad-based weakness in the U.S. equity markets. I believe that the U.S. equity markets gave people a great opportunity to look to add on the small caps going out in 2025, and then also into the tech stocks going out to 2025. Looking at the copper market, unable to find its footing still, but holding that $4 support zone on the December contract. The price has been selling off here, and copper is one of those markets that tends to look its worst and it overshoots before it makes its turn. Another market with very similar characteristics to that is the platinum market. Platinum market, if you pull that up, it tends to really get going in one direction and overshoot, and then also sell off greatly in another direction and overshoot, trending in $100 ranges at a time. So the platinum market here, low 944.40, high 963, trading last 959. And then you also have the palladium market trading to a premium to the platinum. That was something we were monitoring. The gold silver ratio sitting at 84-1. Big standout here, Bitcoin giving up some of its gains, but really trapped in this region. And it's finding and forming this new floor in the market here. So I think that a lot of people are going to find comfort in the complacency and have a long-term objective where Bitcoin futures should have an upside target of 100,000 by the end of the year, and then they're looking at 150 to 200,000 into 2025. Now, looking at the U.S. equities, we do have a lot of good constructiveness, and dip buying, I think, provides a great opportunity because if you look at the projected earnings and earnings per share and PE ratio for it, it's not at any kind of bubble levels. Yes, we overshot on the Trump administration, but we had a steady correction back down. And if you look at where we're trading from an PE standpoint, we're at about this 22 to 23 level. Well, that's basically normalized levels. If you look at like in 2002 with the dot-com bubble, it was 46 times. If you look at 2008-9 when we had the financial crisis, it was 71 times. So don't have this mentality where things are too expensive or too cheap, because they get that way for a reason, and they continue to oftentimes travel in that direction. If you had that premise about the precious metals, you would say that $2,000 gold is just way too expensive, and you look at where the market is right now, and we continue to move upwards because the fundamentals justify that. Now, looking at the markets here, going to the CME Fed Watch tool, 62% chance that the Fed cuts 25 basis points at the December 18th meeting. You look at, and this is a great thing here, you look at what economic data comes out from here kind of on out to the end of the year. We have a ton of Fed speakers coming out. They seem to be pretty mixed on whether they're more complacent on where we're at, or they seem to be more dovish on where we're at. So we're going to get a lot of mixed kind of reviews, but they seem to still be siding on the camp of cutting additional interest rates. I think the G20 meeting is going to be a bust. I think that the data that comes out here is going to be shrugged off. Unemployment claims, Philly Fed, your existing home sales, and then maybe not so you get your PMI data at the end of the week and your University of Michigan sentiment at the end of the week. So no real big movement. And then we go into a holiday week. So that's when people are going to gear up and really start to look at what asset classes are undervalued. And they're going to come up with their 2025 projections. So you look at the gold market, we still believe that yes, the 2,800, 2,850 level, it was achieved prior to the Trump election results. So we were at our level here. We look at this sell-off here as an opportunity to position for 2025. That's why we're recommending the February micro contracts to our particular clients. Not a recommendation out to the public. You want to see us if you want to get the specifics on the recommendation. But we do believe that central bank buying will continue. The U.S. will continue to cut rates. We believe that ETF flows will continue to flow into that market. They have taken a breather here and they have exited since the Trump administration election, but we believe that they will re-enter, and it's a cyclical effect that takes place. We believe that the escalation in trade wars will shift many different central banks to adding gold as the reserves, because there's concerns about not only the US's reckless spending, and the thing about the reckless spending is, yes, it attracts central bank buying, but also if we cut that reckless spending, what happens is that growth begins to decline and inflation begins to take hold, and you get stagflation. So you go into an economic regime that also supports it. That's why any way you slice and dice it, we're pretty much bullish on gold going out into 2025. Now you look at other commodity markets, and I'm not going to give you all the details on what our outlooks on silver and copper and things like that, but silver futures, if you had a futures trading account and you were working limit orders below $30, you could have been filled on that sell-off that we saw 3 sessions ago. So think about adding that towards your investment playbook into 2025. What we like to see is silver futures take off back above the $31 level, start attacking 31.85, and then a breakout above there sends futures, we think, swiftly back up to 32.50 and $34 an ounce. You go into the copper market, pay attention to the $4 support level on the December contract. However, if you're going to position in copper, look to the March contract. And then platinum is another one that is starting to turn higher as well, that needs to break through a couple key levels and we believe could attack the $1,000 mark. So if you got any questions, give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.